Good morning everybody, it's Christian from Consumer Education with the 4 majors and notes update for the 8th of February 2012. Hi guys, it's going to be going 4 majors, just doing the 4 screen CTC strategy here, weekly, daily, 4 hour and hourly. Just looking at the weekly chart, got up to a real flyer this week. Well, a bit of hesitation to start with on Monday, going through to Tuesday, hesitation, and then yesterday's news pretty much, well yesterday Tuesday, pretty much 2 o'clock yesterday afternoon, price just shot off. What we're looking to see is a break of this prior support and resistance level here. We saw in the latter part of November, December of last year. Price has been, the last 2 weeks has been at loggerheads with it, so here just above the 13,200 mark of 250, and yesterday's trading range pretty much breaking straight through that. CTC on this time frame pretty much still in a downside trend. However, if we go to a daily chart, you'll quite clearly see the 3-week uprise here from these lows, consolidating as news. We anticipated the news for the next second bailout funding for the Greeks, which took forever to be announced, and still there is no true announcement. There's word that the latest probably here is the Sunday, so procrastinating out there, still very indecisive. News came out yesterday at, I think it was 2 p.m. GMT, that a possible bid was on the table, and all we need to do was see bits and pieces being rectified. But what it's done though, people just bought on that sentiment. Okay, very indecisive, spinning tops, dojis, a hammer here, all this occurring above a plateau. You can quite clearly see there is a genuine support and resistance in the past. Going through here, hesitation in this link, in this consolidation area, above the two smaller time frame moving averages of 20 and 50. And for the first time with this bullish up move here, the CTC is starting to look blue across the board on the daily. As before, it was still a no true buying opportunity. We got by breaking and closing higher than this prior resistance and support here, 13,2500. Now it looks like if we can find some support over the next couple of days, consolidation, or just a gentle pullback before we further extension to the upside, would be fantastic. If that was the case, then the projection could potentially look like this, for example. Okay, from the lows here to the high, the pullback, and then the continuation. This fib extension, you can quite clearly see price going to that 38.2 level, and now Asian market sessions trading above that, going into the European session. So 50% would be on here at 1335, 61.8 would be a potential target, and 100% is what we'd like to see of the initial move to the upside, which will take us back close to that institution moving average. Okay. Next up is cable, good old sterling. Here again you can see on the weekly, very much an upside trend. Yesterday's influence on the daily here. You can see loads of momentum after 3 consecutive days of indecision here at 15,800. We wanted to see that, a nice little support. We wanted a bullish engulfing to confirm that there was still true decision in this making. Otherwise we could see potentially prices falling over, especially after 3 days of consecutive indecision. So where to for the pair? Well, straight into the institution moving average by the looks of things. Quite close here at the trading range, around the 15,900 mark. That coincides with price support and resistance in the past, quite significant one that we saw back in late October and early November of last year. So 15,900 would need to be breached, and you can quite clearly see the Asian session trading range quite stagnant, very small as we head into this close area here between the institution moving average and the 13,900 mark. So definitely need to see price breaking, trading higher than that with momentum. Otherwise what we could do is see potential consolidation with a bearish outlook over the next couple of days. CTC on our time frame for the daily is looking all positive. The only thing that's in the way is the institution moving average. So got to wait for that to be breached to see any further extensions to the upside. Okay, so 15,900 we know is our intraday resistance level, so we'll just punch that in a horizontal, and you can clearly see that price is pretty much heading its way to that area, and in doing so we might see possible consolidation taking place. Okay, so we can do one or two things. We can either wait, ideally for price to break and close higher than that, to give us a genuine outlook that we are still looking positive long term, or we could look for a potential consolidation range to occur here, and then try and see if we can make some money to the downside intraday. But as it stands now, CTC is well extended to the upside, swinging higher. 50 period moving average coming in one inkling over here to save the pair on a pullback. Here at 15,7500 recently, but we saw the bounce higher. And this takeoff yesterday, the past couple, you can see 100% has now been breached. That's 15,9500 mark, or the daily resistance level here is a 161.8. So clearly see that people have made their pips on the second extension of this upside move that we saw yesterday, and now consolidation would ideally take place before we see a second extension higher. Between 100 and 161.8 is the 50,9500 mark, so we could see consolidation here. Got to see a bullish engulfing through this to confirm that we should be looking ultimately long term on the daily as potential further upside. Otherwise we can see consolidation in this range. Again, the hourly, you can quite clearly see there's more happening above the 50 here on the RSI, relative strength, which indicates that we are in a positive upside move. However, you'll notice that as price is making higher highs after this breakout that we saw yesterday, consolidation breakout, there we go, with all the momentum, trading higher through the close yesterday and the open of the Asian session. Price has still been trading higher. Notice the relative strength from this previous high to the new highs that are taking form now. You can see that the RSI is dipping. Okay, so that gives you an idea that we should be looking for potentially a slowdown. Yes, we are going to still get movement to the upside. It's not saying we're not going to get any buying occurring at this level, but because we are going into a potential long-term resistance level on our daily, the 50,9500 mark, we should be looking for potentially price to slow down. Market sentiment change potentially. We'd like to see price pretty much breaking through that 15,9500 mark with a bit of momentum, confirming that that buying sentiment is still very much in favor of further upside movement, and then we'll act on that. Straight into the US dollar Swiss franc. Let's have a look at the weekly. You can see very much so we had a lot of selling in this pair. US dollar has lost a lot of momentum against the Swiss franc in as many years. Since 2005, it's just been in a steady decline, and we've seen a lot of just recently, well, when I say recently, in September of last year, we saw intervention which really kick-started this upside move here, and we've now seen price just plateauing and falling back over the last couple of weeks. And last week in particular, pretty much not falling any lower, so finding pretty much forging out a support area here on the 20 period moving average at the 9100 mark. So on the daily, that's going to show pretty much out as this 9100 market here. You can quite clearly see pretty much a full week's worth of indecision or support being forged. I did mention we wanted to see price close lower than that. The moment you start getting price, we need to see a bearish engulfing to confirm that momentum is still low, favoring lower side trading. You can quite clearly see we had resistance through the early parts of September, some further resistance in early October, early November, a bit of supports when we broke through, going through those latter parts of November, and then we saw prices moving higher. Since then they've moved back, and now they're finding support again on this. So to see this as being a bearish setup, all we need now is a clear break below this support area, this long-term support here. Daily, everything's in our favor. All we need now is the market just to break below that, consolidate, close, and then we should see second extension lower. And if that was the case, then projection-wise, possible projection could be ultimately something along these lines. 100% would take us back to the institutional moving average, but we have 38.8, potentially a breakout to 38.2, pullback, and then a continuation down to 50, 61.8, and 100%. Failure to break the support would mean none of this would actually occur, and then we could see potentially a bounce to the upside. But that would only occur if we had a nice bullish engulfing to really change market sentiment at this level. Failure to do so, we saw a bearish engulfing to the downside. We should only be looking for ultimately these lows here at 87.50. On the way, we could see potential 89.50 being met, but ultimately way down here at the institution moving average between the 80.70 and 75 mark. Looking at our 4-hour chart, you can quite clearly see the support going through this period here. So ultimately what we're looking for is for a clear excuse me, break below that. Otherwise we're just going to be trading potentially into a support if you think you're going short, you don't want to be doing that. You want the market, yes, everything's in our favor. CTC is pretty much red across the board. We had a bit of blue here, but that didn't materialize because it failed to break a prior support area here. Straight into it. I think we got a move higher than we should have ultimately been looking for. Higher highs, roughly here, back to the institution moving average here, and that never materialized. So we wouldn't have been buying into a prior support because that ended up being resistance, a nice bearish engulfing, and we saw price reverting to the downside, testing this 9100 mark. So break below that. We need a definite confirmation. Everything's in our favor. The only thing that's missing now is a move from the market to tell us, yes, we are looking for further shorting opportunities, and yes, we are favoring further shorts for the foreseeable future. Last pair of the day is US dollar Japanese yen. Look at the weekly. You can see we've pretty much been in a very extended downside trend. However, over the past couple of months, we've just seen consolidation sideways. Not much money to be made going sideways if you're trading very small trading ranges, but as you can quite clearly see, weekly charts just pretty much pittering sideways in a consolidative range between 7800 and 76, with the odd breakout to 75.50 where we had intervention. Noticeably, you can see on the weekly chart, this candle over here was the intervention by the government in early November of last to try and get some momentum going, selling a lot of yen and purchasing billions of US dollars, which didn't really work, primarily because there's nothing to really stack that move up then. We have seen some hesitation recently up until Thursday, and then Friday we had great positive news from the US non-farm payroll figures, and that really set fire to the underside of this carriage, and we've seen prices moving steadily to the upside. We'd like to see those continue. Today we are seeing blue for the first time, but we've got to wait for that all-important CTC strategy on the other side to go blue as well. Otherwise, this could all just mean absolutely nothing. We've been in the past. There's no reason why we shouldn't be doing it again. So, US Japanese yen, everybody's been talking about intervention. The closer we get to that 75.50 mark, the more likely is we're going to see the Japanese government jump in to intervene yet again for the fourth time, I think it is, in as many years. So very, very important that the price continues this rally. Otherwise, a failed rally would just put more favor and potentially a bailout, not a bailout, but an intervention by the Japanese government, either with austerity measures or just throwing money at it. So that's one thing to worry about. And a lot of people were worried about that at one stage, so people were staying away from it just in case they were looking for potential shorts, only for some outside influence to change the market direction. So as it stands now, for this to be a true buying opportunity, got to be trading above 78.50 in my eyes. Clearing all this noise here that's been going on since August of last year, with a nice bullish engulfing. This is where patience is key. Otherwise, all we can do is potentially look for price to move up to 78.50 or 7800 to start with, the institution moving average, and then look for potentially a downside move again. It's been doing it like that for months. So there's a trading opportunity there for you guys who like trading your intraday time frames. That's it for me, guys. Hope you have a fantastic trading day. All that remains to be said is just keep it simple, chaps. Look at what the market's showing you, what the charts are telling you. Put your support and resistance levels in. Use the CTC. If you guys, any of your students out there are using it, please use the CTC as a confirmation that market sentiment is genuine in your favor. Once that's done, look at your potential targets, look at your stops. Are they in favor of your money management rules? If they are, place a trade and walk away. If they're not, keep looking. Until tomorrow, have a fantastic trading day and trade serenely.